about equities. Like I said, the Dow tanked 213 today, closed at 10,390. S&P traded down 22 to 1116. These were all fairly big technical breaks, and you know, they came on the heels of, I think the Dow was off 200-ish yesterday. The S&P was kind of mixed yesterday, but you could definitely see that it was sitting on support. And the reason I bring up the equities markets is if you look at the Euro USD and if you look at some of the yen pairs, when the equities markets are down big, those pairs tend to have matching moves to the downside. They might not always end down on the day, but at least on an intraday basis, if you look at the price action during the day, when the equities markets in the U.S. during the New York session are having a rough go of it, you'll tend to see the yen pairs acting to the downside. You'll tend to see the Euro USD acting to the downside. Once again, I encourage you to prove this to yourself. You know, find a chart. You know, you can get, there's a number of free, just do a Google search on free stock charts and bring up the indices, and you can, you know, look at the indice charts in real time, and you can look at the other pairs in real time and see if they're talking to you. But I think that if you watch these on a regular basis, you'll start to get a feel for when those markets are in trouble, what other pairs in the currency markets are also in trouble. And a big part of that, like I said, tends to be people freaking out, getting out of equities. Funds will move monies out of equities in large blocks. So that money doesn't want to go sit on a sideline somewhere. It wants to go to work somewhere else. A lot of times that'll go to work in the currency market, or it'll go to work in another market that, like treasuries, that has the opposite effect, you know, that actually flows through to affecting currencies to cause them to go in that similar direction. So do your own homework, but there's some correlations that you might want to take a look at, and that you could learn a lot about by looking at on a regular basis. And we talked about the banks. You know, the Glass-Steagall talk is, I mean, Glass-Steagall was implemented during the Depression, and it was a reaction to the things that got us into the Depression. So the fact that we're talking about doing another law like that now after our big, financial correction, just mirrors the fact that a lot of people are looking at this as the kind of Depression 2.0, and now they're looking at taking some of the same measures to get out of that. But I think that, at least in the short run, the equities markets are going to pay the price for that rhetoric, and keep an eye on it. Commodities markets. China's GDP is insane. It's somewhere north of 10%. Imagine, I mean, our GDP is trying to bust 4, trying to maybe even bust 3, depending on how you look at the overall trend. Imagine having an economy that's growing at 10% or more. You're going to heat things up rather quickly. So China is starting to look at, maybe raising rates, maybe doing other things to tighten their monetary policy to slow things down. They don't want to get too far ahead of the rest of the world, and they don't want to, create a bubble that gets them into trouble, a year or two out. Since China is one of the biggest purchasers of commodities, and if you look at all the commodities, I mean, markets like gold, crude oil, copper, a variety of the commodities. If their economy cools down, that means they're probably going to buy less of those things. That might be a drag on things like the Aussie or the Canadian currencies. When the dollar gets too strong, it can also be a drag on commodities. You'll tend to notice that when the dollar is strong, the price of oil a lot of times is going in the other direction. So if you have access to a gold chart, if you have access to a crude chart, take a look again at those markets and look at them in the context of what the currency markets are doing, especially as it relates to pairs like the Euro USD tends to, if gold is going up, if oil is going up, you'll tend to see the euro getting stronger. Thus, the Euro USD is bullish as well. If crude is strong, if gold is strong, you'll tend to see the Canadian unit be strong, the Aussie unit be strong. So, once again, it wouldn't hurt you to get access to a gold chart, a crude chart, and start taking a look and see if you can see any correlations there as they relate to some of the pairs that you trade. And once again, this is just another kind of arrow in your quiver, an opportunity for you to have another piece of analysis that might, lead you in the direction of taking a trade, or might, allow you to kind of take a step back, maybe rethink a position and sit on your hands until you see the commodity market come back in line with the currency market that you're looking to trade. All right, central banks. Most of the central banks have used up all their monetary policy options. They can't lower rates any further. They can't add any more quantitative easing, or announce large purchases. Like in the Fed's case, they're talking about buying agency debt. So mortgage-backed securities, treasuries of their own, Fannie and Freddie mortgage, issues. There's not that many more options left for the central banks. So now, you're going to see them tend to rely more on what's called job owning, and this is a kind of a coordinated strategy. This is like the PR guy figuring out what the best time to have have Bernanke go out and do a speech is. You'll see Trichet, and you'll see a number of the other European bank members come out and make statements, and you'll think, well, gosh, why is he making that statement today? And I'm here to say I've been watching these guys for several years now do what they do, and I don't think there's anything accidental to when they time their speeches, and they really go out of their way to get the most impact possible. I mean, Bernanke's up every 6 weeks in front of both the House and the Senate. If you watch some of those hearings, you'll get an opportunity to hear Bernanke, tell the Congress exactly what is on his mind as far as the Fed goes. Very interesting to see how he phrases what he phrases, and also very interesting to see how the congressmen and senators react, congresswomen as well. But just to see, the questions that they ask and what they're trying to get the central bank to say on their behalf, and to kind of see the sparring and how careful Bernanke is and how he answers his questions. Trichet is the same way. He does a press conference after every EU interest rate announcement, and you can get that on the ECB website. You can go back and look at past press conferences, and he talks in great detail about the bank's intentions, but he also spars with the reporters at the question and answer session, and there's no accident in anything that they say during those kind of situations. And then after you'll see, after the Philly Fed comes out, like today the Philly Fed came out and it was disappointing. Over the next several days, you're going to see, Bernanke, you're going to see, Fed bank presidents from Dallas and Philadelphia and New York. You're going to see them come out and make certain statements that are going to be about the Philly Fed, and they're going to be, and I believe that these things are timed deliberately to try to either push the dollar in a strong or weak direction, and just watch when they're out, who they're talking to, and really parse their words. Look for the message in the words. Are they trying to tell us they want things stronger, or are they trying to tell us they want things weaker? If you watch you'll watch the EU rate announcement, and the currency will hardly move. 45 minutes later, when the press conference comes, the currency will go crazy for 45 minutes while Trichet is talking. Same thing happens when Bernanke's on the Hill. Those are some of the craziest trading times, actually, and I bring this up for two reasons. I mean, I want you to be careful. I want you to know when those people are going to be out, who they're talking to, and what they're likely to be talking about. If it's 2 days after the Philly Fed, you probably want to go back and read the Philly Fed report and get somewhat of a grasp on what's in there, so that at least you're not going to be trading, in an opposite direction to what they're probably going to be pushing. Or, if Bernanke's testifying, maybe you don't want to be in a position at all until after he's done testifying. So really watch, take the time to do some homework, All the central banks have great websites. The Canadian Central Bank just put out a monetary policy review today, which I haven't had a chance to read, but I mean, there's a lot of detail in there. And if you really want to learn about an economy, that's a great place to start. So keep that in mind. And I think that's about all I have here. Let me see. Yeah, that's it. So, Ari, you want to talk about our contact information, and then we can open it up for questions?
Sure. We can be contacted at 888-345-9120, and the rest you can see up there. Email. We have a Facebook group, our website, YouTube channel. We also have a Vimeo channel. It's sort of like YouTube, and that's www.vimeo.com/FXCEM.